Welcome to Money Mode, the channel that makes money talk less confusing and way more useful. Let's get into it. There's a word echoing through every stock exchange on the planet right now. Traders whisper it, analysts chart it, retirement funds are betting billions on it. That word is AI. And in 2026, it isn't just changing technology. It's rewriting the entire stock market, one earnings report at a time. Picture the world's stock markets as a single glowing map. Now imagine one sector lighting up brighter than all the rest combined. That's what's happening with artificial intelligence stocks, a wave of investment so large that some analysts are calling it a full-blown mania, and others call it the start of a new industrial revolution. At the heart of it all sits a tiny piece of silicon, the AI chip. These processors power everything from chatbots to self-driving cars, and right now, demand for them is outrunning supply. The companies that make them can barely produce enough to keep up. To run AI at global scale, companies need massive data centers, warehouses of servers running around the clock. The world's biggest tech firms are now spending hundreds of billions of dollars a year building them, and that spending shows no sign of slowing down anytime soon. Some chip makers say their most advanced processors are essentially sold out months in advance. When a product is this scarce and this essential, investors take notice, and they start buying shares of the companies that make it, hoping to ride the wave early before prices climb even higher. This isn't only an American story. Chip makers in Taiwan and South Korea, tech firms across Europe, and rising companies in Asia's emerging markets are all riding the same current. AI investment has become a truly global phenomenon, crossing borders and stock exchanges alike. Investment funds, pension plans, and everyday retail traders are all pouring money into this sector. Some are buying shares of the big, familiar tech giants. Others are hunting for smaller, lesser-known companies they hope will be tomorrow's breakout stars. Veteran investors can't help but notice the parallels to another era, the dot-com boom of the late 1990s, when internet stocks soared before many came crashing back down to earth. So naturally, a big question keeps coming up again and again. Are we in a bubble or just getting started? There's an important difference, though. Much of today's AI spending is funded with real cash from hugely profitable companies, not borrowed debt like in past bubbles. These businesses are already generating enormous earnings, not just promises about the future. It's not just big institutions anymore. Everyday people, trading from their phones, are pouring savings into AI-related stocks and funds, hoping to catch the next great growth story before everyone else does, sometimes with money they can't afford to lose. Some of the world's most valuable private AI companies are now preparing to sell shares to the public for the very first time, in IPOs expected to be among the largest in stock market history. Investors around the world are lining up for a piece of the action. But this boom has a hidden cost: electricity. AI data centers consume staggering amounts of power, and utility companies worldwide are racing to build enough energy infrastructure just to keep the servers running around the clock. Not everyone is convinced this rally is built to last. Some economists warn that valuations have climbed too high, too fast, and that a sudden shift in confidence could trigger sharp swings in the market, just as it has in past technology cycles throughout history. Because AI is now tied to national economies, energy grids, and even security, governments are getting involved too, competing over chip supply chains and technology leadership the way nations once competed over oil and gold. Smart investors are learning to look beyond the famous chip and software giants, toward the power companies, materials suppliers, and infrastructure firms quietly building the foundation this entire boom depends on, often overlooked by the wider market. No one can say for certain whether today's AI stocks will look like a bargain in 10 years, or a cautionary tale told in business schools. What's clear is that this is one of the biggest investment stories of our lifetime, and it's still being written. Whatever happens next, one thing is certain: artificial intelligence has moved from a tech buzzword to a force reshaping global finance itself, influencing everything from your retirement account to the price of electricity in your city. This channel breaks down the stories shaping our world, one explainer at a time. If you want to understand where money, technology, and history collide, hit subscribe, and we'll see you in the next one. This video is for educational purposes only and is not financial advice.